Okay, this presentation is about the Solana ecosystem and all we got to know about it, and so that we can learn more about it and be happy about attending World Solana Forum October 14, which is next week, Thursday, where we have a lot of speakers just sharing a bit more in-depth market best practices and insights and observations about the different parts that I'm going to touch briefly today. But then next week we'll have experts speaking about it. So Solana at a glance. What is Solana? It's a highly functional open source project that banks on blockchain technologies, permissionless nature to provide decentralized DeFi solutions. That's important to mention because the founders of Solana, they were actually hobby traders, and then they were seeking for a product that would help them solve some problems that they had as a regular user of different other blockchain solutions that would offer trading. And I'll speak about it in a second. Solana can handle 50,000 transactions per second with 400 millisecond block times. We will go into what that actually means compared to other ecosystems in a second. And so what do we actually need to know? This is just from CoinMarketCap, a very rough overview. Solana was founded by Anatoly Yakovenko and Greg Fitzgerald, and both were engineers at Qualcomm, which is an American company, a tech company. And Solana was ranked number 7. It's always in the top 10 for the past few weeks, a month currently, being one of the I would say, more hyped blockchains. And yeah, it has gained like 700% in price increase since July. And I have some funny statistics coming up next. It also launched an NFT platform, a collection. Like that's a lot of value, and I will speak about that in a second too. And Solana had an all-time high of 216 on September 9, and currently it's in the 160s. So this has been the chart movement of Solana. So you can see, like just briefly mentioned, it's gone up and down, and currently it's on this area of around 140 to 170 up and down every day, like a lot of different cryptocurrencies, very volatile. If you had invested $1,000 in Solana in 2021 in January, and that $1,000 you would have kept in your wallet, then today you would have $84,000 on a current price of 158. So would have been quite a nice investment. Actually already been into the game too early. And currently Solana being one of the more hyped and bigger infrastructure, so layer 1 blockchains, what is actually so special about it? And it's the way they redesigned the consensus mechanism, which is how they basically provide their high number of throughput on the platform. So what it actually solves is, when you look at typical blockchain ecosystem projects, there's something we call the scalability trilemma, which was made famous by Vitalik Buterin, and where it says a blockchain typically can solve 2 out of 3 problems. You can't really solve 3 problems at the same time, being decentralization, security, and scalability. And Solana is about to challenge that. However, in the past few weeks or a few days, actually, we have seen a little bit of network interruptions. So people are now questioning whether it's really that innovative. So what does it actually do in terms of throughput? So you can see transaction throughput on Solana is over 50,000 transactions per second. Ethereum has around 17 transactions per second. Bitcoin has around 5 to 7 transactions per second. So what is that actually good for? It's good for if you need a lot of transactions on chain, and when you want to have high volume of trading, for example. So like I mentioned earlier, actually the founder of Solana was a trader, I think options trader. And he was like, okay, if we have like these transaction throughput KPI that the traditional blockchains offer, then we can never compete with solutions that are offered using used by the stock exchanges, the traditional stock exchanges. So it's looking into ways to solve that problem for those who need high volume of transaction for their daily usage. And you can also see the transaction fee, obviously, if you can offer a lot of transactions per second, then transaction fees go very low. Transaction fee on Ethereum, $2, like for those who actually do transactions on Ethereum, you know that recently it has gone up a lot more. The consensus mechanism that Solana uses is proof of stake with their a little bit refined version called proof of history. I will not go into detail because I also wouldn't be able to explain it in a way that it would make sense. Ethereum currently uses proof of work, but is upgrading to proof of stake also. And then you can see all the other blockchains also using some way of proof of stake, whereas Bitcoin is still with the proof of work and will stay as a proof of work as far as we know today. Just to compare, because when you look into cryptocurrencies in the finance markets, typically the first argument, apart from most of the people who don't really engage so much with blockchain, that it takes too much energy and blah, blah, because they compare it with Bitcoin mining, and then they say it's not green and so on. Apart from that, most of the people would say, yeah, but blockchain is a bit too slow to really work for everyday usage. But then you can see, for example, that a Visa card has 24,000 transactions per second. And as you saw in the previous slide, Solana could offer double the speed for use case. So it seems that Solana is currently offering a solution that uses blockchain technology that is competitive with different alternative solutions in the market. And you can also see that, like, for example, PayPal and so on, they have a different technology that doesn't allow to process so many transactions per second. And then how do you actually also see if this ecosystem, you know, has a lot of chance to survive and become adopted? You want to look at their ecosystem. You want to see, like, how many projects are actually building on that blockchain ecosystem. And you can see on their website, they have very beautiful maps. I brought them for you too, that they have over 350 projects actually building on Solana at this very moment. So these projects are mainly in DeFi. DeFi meaning decentralized finance. So using it to facilitate economic transactions. Then if you are apps, NFTs, we'll speak about it in a second. Metaplex is one protocol solution that offers some DEP solutions, and then decentralized exchanges. Because if you want to trade on a blockchain, it's a way to exchange tokens. And then they have their native community. So this is what you can see in terms of reach. They have 85,000. Actually, the last time I checked, I think they had over 100,000 Telegram members. So it's a very, very active community, thousands of messages per day. And then Twitter's has a lot of members, YouTube, 17,000 subscribers, and so on and so forth. You also see they have on Weibo, which is also a different geographic community. So it's kind of a network that is super, super new. Like since mainnet launch, it's been quite new, and then yet it already has a lot of traction in the community in itself. Here you can see again a map of all the different logos of the different projects building on Solana. Some of them are not only Solana projects, so they also serve other chains, but they are also integrated, which is actually important. And so when we, for example, at UNIT build our ecosystem, we're also looking for ways to bridge and to integrate with the Solana ecosystem. Here is an example of the NFTs that, just following up on Sam's presentation a few minutes ago. So Solana has had some great success story or PR success story selling NFTs that have reached almost 6 billion in volume, in trading volumes. And yeah, they are called degen apes. And the term degen, we've heard this morning at the Unit Masters session, is quite a new term from the blockchain world. Degen apes is currently a bit hyped, as much hyped as like the stones that Sam has presented a few minutes ago. Here, this is also another interesting indicator to look at an ecosystem. And you would want to see how many people out of the community are actually using or contributing to the ecosystem. And one way to look at it is to look at different hackathons, like coders who actually build projects in hackathons, which is just a nice way to fastly scale up some idea and then see if there's traction, and then basically build upon it. If you feel like within a few hours, 60, 80 hours, over a few days or weeks, you were able to build a solid product that other people can use and test and so on, then typically it makes sense to go all into it. And you can see that over the years, Solana has had a lot of hackathon registrations and also a lot of project submissions. Project submissions being like when people register for hackathons, it's quite simple. You can always sign up to be part of the team, but then really do you submit a product developed at the end of the hackathon? You can see it's quite a lot. It's different hackathons attract different community members. And the cool thing is, I guess, or from what I understand, it's so attractive for the community because majorly Solana uses Rust programming language, which has a large user base across the world. And so also looking forward into the future, one would expect that there will be more community-driven development because it doesn't have a cap like Solidity, for example, in terms of usage and building on the blockchain. This to be consumed with a bit of caution because I'm not a coder myself, so I don't really know whether that is valid or not. That's what I heard from community members. The history. Well, Solana is not completely new. It's infrastructure technology, and it was already developed in 2017 by Solana Labs. Solana Labs was founded, and I will share the pictures of the founders in a second, in the US, and then it was launched in March, and then basically it was handed over to the to a foundation. So now the foundation basically owns the IP of the Solana blockchain, and it was rolled out in 2017 and raised 25 million in public and private funding rounds, and yeah, was built by people from the tech field. In terms of founders, I think I want to just share here the key people in the Solana ecosystem. So you see Anatoly Yakovenko, and then two more colleagues also from the Qualcomm background. So here on the left side, you see a little bit of a background of the tech skills of Anatoly. He was a staff engineer manager at Qualcomm for quite a number of years. Then he changed to a different company. Then he became an engineer at Dropbox, and then he built Solana. So quite decent, deep track record in building tech products, also using cloud infrastructure. And then the other guys were also from the same environment. And here below you see one of the major ambassadors and also investors of Solana. This is Sam Bankman-Fried, and he's also the founder of FTX, which is an exchange, or centralized exchange in Hong Kong that actually has a lot of Solana integrations. So one of the big supporters of the Solana ecosystem. Here you can see the different exchanges where you can actually buy Solana, and then you can see they are quite a number of them. So the major centralized exchanges, Binance, Coin, FTX, like mentioned by Sam Bankman-Fried, and then you have the Coinbase. So ultimately, what we can say is that Solana is adopted fairly, is already integrated in a way that it can go for mainstream adoption because it has already been listed by the major exchanges and makes it very easy for people to buy it, even when they are not familiar with the crypto space. Then, this is about an interesting development about the market cap or the total token supply of the Solana ecosystem. So this is a proposal that was that was made from the community. It was somewhere in early January this year, and you can read it on the Solana.com website. And the idea was that the community proposed that there be an inflation rate, new tokens being minted, but that inflation rate should not go linear, but it should reach a limit. So this is why they have proposed a disinflation rate of 15%, meaning every year this 8% grows not by 8%, but like by 8% minus 15%. So that over time you reach some asymptotic kind of distribution, which leads to the long-term inflation rate of 1.5%. So it's kind of, it's not like Bitcoin where you kind of have this 21 million, it kept a supply, but since it has this disinflation rate also reached like always staggering growth. And then the inflationary issuances are proposed to be delivered to delegated stake accounts and validators. So what does it actually mean? What are stake accounts or validators? So in the Solana ecosystem, like I mentioned, the Solana ecosystem uses a proof of stake consensus mechanism. So proof of stake consensus mechanism means their decentralized way of securing the integrity of information displayed on the blockchain is by people delegating their Solana or locking up their Solana as a collateral for being able to validate and contribute in security of the blockchain. So this is called staking. And the yields for staking, because in the Solana ecosystem, people like, it's a decentralized blockchain, right? So you do need to reward participants to contribute to the ecosystem. And the way they do it here is with staking yields. And you can see that basically dependent upon how many people who own Solana delegate to the validators to participate in the consensus mechanism of Solana, that will have an impact on how much you earn. So you can actually, as a Solana investor, if you hold Solana tokens, and many people do, actually over almost 80% of people who hold Solana delegate their Solana to the security consensus mechanism, which is quite a high percentage. And then as a reward for contributing to securing the system, you earn a reward, and that is dependent upon, you know, how many people actually are contributing to the security system. So it's market and demand. When 90% of the people basically give their assets to secure the blockchain ecosystem, then you can see the yield is a bit lower. And then when only 60% are locking up, and in Solana, you typically lock up between 2 to 3 days. It's called epochs. And a period basically where you can contribute, you lock it up for 2 to 3 days. And then if only 60% of the network contributes to locking up the tokens, then you get a higher yield. And that is kind of a schedule, a pre-programmed schedule currently in use with the blockchain ecosystem. And it says that over the time, basically you receive less yield on locking your tokens. So, and because not everyone can, and this is one of the major criticisms from outsiders looking at the Solana ecosystem, is that there is high technological requirements to run validation nodes in the Solana ecosystem, which means that in theory, everyone is invited to join the ecosystem, but you have to invest into specialized staking infrastructure. It's a bit like in the Bitcoin mining network where you have to invest a certain amount to buy Bitcoin mining, which leads to the fact that now there are professional staking providers, and they basically accept your token delegations, and on behalf of you, basically they secure the network, and for their service they charge a commission rate on the rewards that you would have earned according to the schedule that I showed earlier. And every time the rewards are issued, the commission is deposited in the validator. The validator is basically the one who runs the staking services for you. And the remaining rewards are deposited in all staking accounts that are delegated to the validator. So everything, I think all that we need to remember from this is everything happens per smart contract. So there, like everything is happening automatically. you don't really have to do a lot of transactions back and forth, but you lock it once, and then something in the background happens that you, as a delegator, you see the rewards. So this is the network. You can see these are the different service providers or the nodes that are securing the blockchain. They are everywhere in the world with some major hubs. You can actually see online, this is Solana Beach, is like a blockchain explorer for the Solana network. And then you can see how many stakers, like professional staking providers, are owning how much of the stakes delegated to secure the network. Or not owning, but like how many people have delegated their Solana assets to these stakers. And then you can see backwards, basically, how decentralized is the network. Because all these people will compete against having stakes delegated to them, so they can earn a commission fee that you can see on the right-hand side. Yeah. I think a quick run through Solana ecosystem, the history, the founders, the security network, their USPs. We are actually working on making possible that you can bridge Solana tokens to the unit network, and more details will be shared over the course of the next weeks. Hopefully we can invite a few community members and change makers of Solana ecosystem to attend our World Solana Forum next week. We have already a few very, very cool speakers confirmed. So from the validation side, we have one of the founding team members of Chorus One coming. So they will explain how Solana staking works with the Lido network, which is a collective of stakers who make sure that the decentralized principles are all together. We have members from staking facilities coming and share about Solana Beach. So how did they actually develop Solana Beach? We have people who are building dApps like Bonus Market, which is an influencer celebrity marketplace, coming to share their story of how they actually built on Solana. And hopefully we can also invite some more people from the DeFi community and from the NFT community who are building projects on Solana, because you've seen there are like 370 projects and many, many more that are actually being built at the moment and maybe not ready to launch yet, that might come and share their insights and perspectives with us. That's about it. I hope this was interesting to you, and I hope that you enjoyed all the other World Unit Conference presentations too. Open to any questions anybody may have. If you have questions, I think you can write them into the chat or raise your hand so that I can ask you to unmute. How does Solana compromise on security for speed? Wow, that's a very good question, Sam. So in general, people would say that proof of stake is not as secure as proof of work. This is also still very debatable, but when you look at things from a physical point of view, like in proof of work, people are competing for energy and time resources, and which is quite difficult to replicate. So in general, one would say already using proof of stake is kind of a compromise in terms of security. The second thing to add there is the technical requirements that are imposed on participants who want to participate in the staking lead to a fact that basically not everyone can participate, which means that there will be over time a bunch of smaller contributors to the ecosystem, and which exposes the ecosystem to a risk of being shut down because it's not as decentralized. It doesn't have like many thousands of stakers, but rather, like you saw on the list, a few, like typically on average 20 validators who own like 30% or so of the network stakes, and then could actually take over how do I see the relationship between Solana and Unit? Well, most of the projects nowadays who don't build layer 1 solutions, they build apps that are multi-chain integrated. So that's what you've maybe seen from Sam's presentation earlier, or the different presentations, maybe yours also, Zach, about the arts world. People don't care about the underlying technology, right? What they care about is how to use a product. So they are typically multi-chain setups. That's what we're seeing in the gaming world. That's what we're seeing in the NFT worlds, and so on. We're still at the stage where people are assessing the different layers, and also the different layers are not yet at a stage where we can see who are the top 5 winners. Let's say that. I think we need another 18 to 24 months to see clearly who will be the ones who remain. And when we talk to projects like that are open to be multi-chain, then basically they can benefit. Even projects who are already building on Solana can benefit from the different features we have at Unit. So for example, the token treasury feature that would allow projects to put treasury like Solana. SolU is basically our bridged version of Solana on the Unit chain to put into our treasury. And thereby, basically, they can use our Unit network interface, can use actually all the benefits of Solana blockchain, but also back up their token with the Unit Solana bridge. So they can participate in both ecosystems at the same time. I think that will be what we will see in the future, that ecosystems are interoperable. And that's one of the reasons also why we're building on Substrate, so that we have interoperability built in on our technical side.